Good morning, everybody. This is Patrick Montesdeoca with the Equity Management Academy Live Trading Room. This is June the 6th, 2019. What I would like to do here on this segment is to take a look at the E-mini S&P 500 futures contract and see what it has done since we published the report on Seeking Alpha last week. On that report, we indicated that the sell one level of the weekly indicator was coming in at about 28.12 to 28.72. And as you can see here on the chart, the market traded through that sell one level and pretty much is trading right now with a high of 28.38 between the sell one level of 28.12 to 28.72. We have recommended our subscribers, our traders, our members to take profits as we meet the target of 28.12 and reduce your position depending upon the type of portfolio that you have, whether you're a speculator or an investor. These levels that the VCPMI artificial intelligence provides you gives you the intelligence for you to manage your inventory, whether it be in futures, stocks, or ETFs, intelligently. Once you understand the artificial intelligence logic and methodology of the algorithm, then you can prospectively plan your portfolio accordingly. And in this case, we recommended that you continue to hold long positions on the mini S&P with the futures contract and derivatives. But when you get to the sell one level here that we anticipated on Saturday, begin to take some profits. The sell one level, when it is completed, it gives you a 90% probability factor that if the signal is activated and triggered from this level, that it would revert back to the mean, possibly of 2781. Right now, obviously, it's in the area between the sell 1 and sell 2. There are no short signals. The market is, as I said, pretty much waiting either for the price to come down to close below 28.12 and trigger and activate a short signal, or to go up to 28.72 and complete that pattern. What is important to understand if you are following the VCPMI artificial intelligence is that the red levels, when the algorithm identifies the red levels of sell 1 and sell 2, it is basically the area, the highest probability area of distribution of supply. So we do not recommend our members or traders basically to buy between sell 1 and sell 2. If you buy between the sell 1 level with a 90% probability against you would be the case. The probability right here at the sell 1 favors if the signal is activated by the artificial intelligence methodology, and that is that if the price closes below 28.12 using the 15-minute bar, that it would activate a short trigger, activating as well the mean target below of 2781. Your stop automatically is the pivot of 28.12 if activated below. We are maintaining a long bias position here. We have still some inventory long, and we would liquidate that and take profits at 28.72 or on a close below 28.12. The reversion to the mean gives you a very specific structure, a mathematical structure of a Fibonacci number of 5 levels, which is a perfect structure in the composition of the VCPMI algorithm. And within this Fibonacci number and structure, you have identified GAN levels which calculate basically, or GAN formulas which calculate the very specific price levels using the square root of 9. The color gives you the area of the extreme above the mean, which is the green level, representing the average price. And so the basic concept of the VCPMI artificial intelligence is that it creates a very specific structure for you of 5 levels. It identifies for you the average price daily, weekly, or monthly. And it gives you the extreme levels above the mean with a 90-95% probability based on the relative implied volatility factor of 1 to 1 from cell 1 and 2 to 1 from cell 2. And so the idea is that what we want to do is buy into demand, or buy into the area of blue, which is demand, take some profits on the average price, and if the market activates the trend momentum by closing above the average price, it triggers and activates as well the cell 1 and cell 2 level above the mean or above the average price, where the supply has a very high probability of attracting sellers, or price has a high probability of attracting sellers. And in theory, the probability factor is telling you that at the cell 1 level, there is a 90% probability that it may begin to attract sellers or supply into the market. And the artificial intelligence tells you that in order for the trigger point to be activated, the price has to close below that pivot level. In this case, the cell 1 level of 28.12.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.